Hi, welcome to 20EA's first webinar of 2024. Today we're going to be reviewing the start of the property market in 2024, and as always, joined by an esteemed panel of guests. So the man to my right needs no introduction, it's Stuart Ducker of 20CI.
Hi, Paul.
And then the man in the middle is Richard Palfreeman. For those that don't know, Richard used to own Northfields, a really successful estate agent in West London. He sold that a couple of years ago to Leaders Romans Group and now works alongside Peter Knight of the Property Academy.
Thanks for inviting me. Very pleased to be here.
You're welcome, Richard. The man at the end, Simon Gates. Again, man probably doesn't need an introduction. Simon's an ex-agent, ex-supplier, turned industry coach, consultant extraordinaire, friend of the show. It's great to have you back, Simon.
Thanks for having me back.
So let's get straight into it. Stuart, I'm going to turn to you first. We've just got the data for Q1. How's the year started in the property market?
Well, if you look at the HMRC numbers, it suggests that transactions are down. Certainly for January and February anyway. In fact, they're the lowest that we've seen in the last 10 years. But what people have to remember is it takes about 6 months to move house from when you instruct your property to when you sell it. And if you cast the clock back 6 months from Q1, the Bank of England didn't stop raising interest rates until August 2023. So if anything, that's a little bit of a negative view. Actually, looking at this from an estate agent perspective, I think 2024 is hugely positive now compared to last year, certainly. I mean, if we look at the supply, it's higher since pre-pandemic, so it's up 12% year on year. The demand is up 16% versus last year. Now, that's a little bit misleading because of the fact that Liz Truss and Kwasi Kwarteng did what they did at the back end of 2022, which still had an effect on Q1 of 2023. But even compared to 2019, demand is still 4% up. So the volume of sales agreed is racing away, especially in London, where demand based on last year is 21% up in inner London. I think there's lots of other good news for estate agents as well. So the percentage of fallen throughs is down. The hybrid agents taking their market share is also down as well, which is good news for traditional estate agents. There's no longer any kind of stock shortage. There's less price reductions than there used to be. So from a sales perspective, looking very, very positive. The only blot on the landscape is that it still takes a long time to move. And what we've recognized this quarter is that actually selling a property has raced away. So it now takes 20 days longer to sell a property than it did last year. Completion timescales are still the same at about 4.1 months, that kind of order of magnitude.
Yeah, we'll hold that thought. I think we'll come to that later.
Now, on the letting side, also going away with it, sort of less growth, if that makes sense. So supply is up 5% year on year and demand is up 6% year on year. But I do just want to point out in London, because it just seems to be racing away. So 23% increase in London demand for lets agreed year on year versus last year that we've seen in Q1. And Outer London is not far behind it, 21%. So no matter what it seems with the letting side of things, it's still a shortage of available stock. Stock has gone down. And unfortunately for those renters out there, the private renters, the price is still going up year on year.
Great, thank you. Richard, I'll turn to you next and just perhaps touch on the kind of sentiment or the start of the year. Although not a practicing estate agent, I know you're dealing and speaking to estate agents all the time, as is Simon. So just how are the clients you're speaking to, how are they finding the start of the year?
Very similar to the figures we've just been given there. I looked at some of the figures for one of the businesses I deal with very close to where I live, just out in West London, and they're 14% up at the moment. So they almost match exactly what you're just saying there. So the kind of sentiment is that a lot of people put their decisions on hold last year and now have decided to just get on with life and just want to get moving, basically. And I think they've factored in the fact we've had high interest rates, etc. And I think they've got over that. I'm not to say there isn't difficulties with cost of living, etc. But I think people just want to get on with their lives now more than anything else.
Yeah, great. And Simon?
Yeah, I think to echo what Richard said there, I think that it's a mixed bag with the agents I speak to, but the agents who were working really, really hard throughout a difficult market in 2023 are seeing the fruits of their labour in the first quarter of 2024. Some of the agents who perhaps, I'm going to sound really harsh, but feeling a little bit sorry for themselves in 2023, sort of blaming the market and external sort of factors, are not being as positive in Q1, and that's probably because of some of the things that they weren't doing in 2023. So yeah, I think to echo the sort of stats there as well, it's great news with supply being up, sales are on the up. I know we'll come on to it later, but the interesting bit around it taking so long to go from sale agreed to completion, I think is part of the reason why we're seeing some lower figures in terms of the actual transaction numbers as well, because it takes so long to actually complete as well. So what you see as sale agreed in Q1, actually not going to see in the completion figures for a very, very long time.
Yeah, and yeah, as I say, the completion figures are low, but I'd expect that to skyrocket as those sale agrees come through later on the year. Now, just in terms of sale volumes, obviously last year transaction volumes were as low as they've been for a while due to all the interest rate rises and uncertainty. But sale agrees are definitely on the rise all over the country. So do we have a view on what will happen to sale volumes for the whole of 2024? I know we don't like predictions too much because it can change in a coin cost, but have we got a view on that?
Well, I think certainly at the start of the year or the back end of last year, we were suggesting about 1.1 million transactions. So 2019 was about 1.2. These are HMRC equivalent numbers that I'm quoting now. And we actually thought that the market wasn't going to perform as well in 2019. All depends on when that interest rate cut happens and also what happens with the election, which is two of the things that we're going to speak about later on. But I wouldn't be surprised to see an equivalent year to 2019. So anywhere between 1.1 and 1.2 million would be my guess.
Yeah, which would be a good result for a estate agent.
Yeah, very good result, I think.
Yeah.
Richard, Simon, anything to add?
Yeah, I would agree with that. I think it is going to depend on the election. If he calls an election too early in the year, that's going to have a knock-on effect. And if the time period he actually calls it to doing it is too long, that will also affect the market, I feel. So I think volumes are definitely going to be up this year. But if he calls it, say, November and announces it in September, just hypothetically, you're going to have a bad quarter at the end of the year. So I'm hoping that won't happen. Subject to that, I think we're in for a good year.
Great.
Yeah, I know we're going to come on to the election side of things, but I think for any agents watching this, making sure you're front loading your activities, because it's going to be a very, very short last quarter. A bit like what we kind of had, I'm trying to cast my mind back now, 2022, when we had the first kind of, let's say, normal Christmas outside of lockdown, and you had the Winter World Cup. It felt like the market shut down a lot sooner than Christmas. But on the sales volume levels, I think, yeah, if we can get to 1.1, 1.2, I think that'd be a really good result, considering the extended hangover we had of the Kwarteng Trust mini budget of autumn 22. Yeah, I was thinking it'd be around a million-ish. So if we get to 1.1, 1.2, I think that'd be very good for agents.
Great. I think I'll just touch on interest rates now. You mentioned Trust Kwarteng. I think at the time recording, the current base rate's 5.25%, I think. And obviously it's imperative. I think what we're finding is the demand side is up. So I think people have just decided to get on with it compared to where we were a year ago. So have we got a view on kind of base rate cuts and when we think they'll come down, or what rate they'll come down to?
I think like Richard said, people have just decided to get on with it. So what we saw in the sort of Q3 of last year, and even leading into Q4, is that last rise in August had a real impact on the property market and on sales agreed, without a shadow of a doubt. But people now, it seems, have got used to this high level of borrowing, effectively, or more used to it than they were before. It helps that the banks are trying to compete with each other. And Andrew Bailey himself now is keen to, whilst not yet cutting interest rates, is keen to talk about inflation on a downward track. I think it's 3.8%.
It's 3.8 at the moment.
And he's basically said we don't have to wait until 2% before we cut interest rates. It just has to be on a downward track, basically. So your guess is as good as mine, but suspect late.
I agree with that. I think there's just going to be small incremental changes. I mean, my sense is I think you'll probably end up about 4.75 at the end of the year. That's my gut feeling. I mean, GDP is probably forecast for about 1.5 this year. Yep. I think inflation probably will go up again a little bit towards the tail end of the year, but I think they just, prior to an election, they'll do everything they can to get base rates down. The Bank of England might feel a little bit differently about it, but I think you're going to be around about 4.75.
The interesting thing, though, is he appears to be upbeat about the economy. And you know, when Andrew Bailey's talking about it, he's certainly not talking about interest rate rises, which is where we were for a very long period of.
I've been a little bit sneaky here because I actually went to a breakfast meeting 2 weeks ago with a Bank of England economist.
Okay.
And the whole discussion was on what's going to happen to base rates. And this guy is responsible for setting one of 8 or 9 people responsible for them. So the Bank of England's view now. Some people say they don't know what they're doing, so take this with a pinch of salt. But they're expecting a base rate reduction in June, and for that to fall to about 4.5% by the end of the year. So close to what you're saying, Richard.
Wow.
With the aim of it getting down to about 4% by December 2025. So at the moment, that's their current view. But obviously, a lot's going to happen in between that. I think that'd be a good result.
I think it'd be a good result. The interesting thing is some good deals out there at the moment. I was looking to speak to the brokers that we deal with, and I was saying, 5-year fixed, 4.17 at the moment, which is not bad. I mean, it's got a reasonable loan to value on that, but it's that starts becoming more attractive for people, looking to move.
The problem is, I mean, what's the alternative? If, and it is a big if, if you're in your late 20s at the minute or early 30s, and you can muster the 20% deposit or the 15% deposit that you require to get a 40-year mortgage, you are much better off on a month-by-month basis buying them renting almost everywhere in the UK apart from the northeast. Basically, when we looked at it before. And anecdotally, from my own evidence, there's people on my team that are paying £1,700 rent per calendar month. Whereas if they were to have a mortgage on the same property at those sorts of magnitudes, you're talking about £1,200-1,300. It's a significant saving. So I think we've always got that as well in terms of the fact that private rentals in the UK is so messed up that actually you're much better off buying a property if you can muster the deposit, which I appreciate is a very difficult thing to do. Yeah.
And Simon, any view?
Yeah, so I think, God, there's so much to cover off there. On the rental side of things, I renewed my mortgage in the autumn of 23, and it was a lot more than what I've been used to. And I'm, how old am I? 33. I bought my first house in 2016, so all I'd ever known was sub 2% base rate in terms of purchasing a property. But I kind of had means tested myself when I was buying a property, knowing that these rates were abnormal, not normal. And in terms of what, let's say, my property would rent out for now, to reiterate what Stuart said, it would rent I'd be paying a considerable amount more in rent than I would with my mortgage, even with where it is now. In terms of what you said about having breakfast, I'm very jealous about that. But I think in the last meeting, I think it's the first time in quite a while that no members of the committee voted to increase the base rate. That was the first time in quite a long time. I think one of the 9 voted to reduce. So it shows that we're moving in the right direction there. And then I think the sort of the gap between a 2-year and 5-year fixed rate is very, very slim, which shows that the prediction is thinking that rates are going to steadily come down on that as well.
Yeah,
and I think on that as well, just one other point. If you think of actually the activity that's come back to the market with the base rate being at 5.25 and what it is paused 5 times in a row after 14 rises, I think that shows that there's activity at 5.25. So if it does get to the mid-4s, I think even more activity will come back to the market.
Those of us like Richard and myself can remember the 15% interest.
I didn't want to say you were longer in the tooth than I am.
Not that long
To make you feel
ago.
better, I remember when I first bought the business, I was paying 20% to the bank in a loan interest because they were charging me 5% above base, which is 15. So
while me and Simon were in nappies.
Absolutely. So there you go.
But on that point, very quickly, I've geeked out on this a lot. In terms of the base rate, it had never dropped below 2% in their history.
That's correct.
Until January 2009. Yeah. So the whole January 2009 until, what was it, late 21 when it started rising again, that's kind of a dozen years for the likes of myself and Paul, who've only ever been used to that. So again, back to that point, we think that's normal, but not, that's the
I think the long-term rate is something like about 7 or 8%. I might be getting this wrong, but I think it is something like that, I think.
So going back to 1694, I think it's 5.9%.
Well, you're better than I am, my friend. Very good.
What a stat.
What a great stat.
So we're below long-term rates.
Yeah, we're below long-term rates. Yeah.
We've mentioned it a couple of times, but I just want to turn on the election. So it's election year. We don't know when that will be exactly, but my guess will be it's probably towards the end of the year. Now, Richard, actually, you've obviously been in the estate agency a long time. No offense, but
No,
but you will have worked through worked through plenty of election years.
Yeah.
So perhaps to some of the less experienced estate agents out there, is there a pattern in an election year, or anything you can pass on that?
I think the main thing I'd pass on, to echo what Simon said, is make hay whilst the sun shines.
Yeah.
And be very focused. But even when there's an election on, people will still need to move. And I think the key there is to identify the ones who absolutely do need to move. And I'm talking about both vendors and purchasers now.
Yep.
So we used to find that when things were very tough, we would really categorise our vendors into the ones who absolutely had to sell. And again, work with the purchasers and get your applicant management under control and find out who really did need to move. So it's going back to real old-fashioned estate agent basics. So you can still do business, but you've got to identify the people who will have to move, basically.
Yeah. And do you think, Simon, do you think kind of vendors or purchasers are asking this question now, or do you think they're not really thinking about that? Should an estate agent have an answer prepared for this? When to sell?
There is a really interesting research piece from Hamptons on the last 7 elections that have taken place in terms of actual sales figures in the quarter before the election and the quarter after. Actually not been too bad. So I would say to any agents watching this, go and find that Hamptons research piece or reach out to me and I'll send them a link to it. It was really interesting on that. And yeah, I think any election, people are going to sit on their hands like they had done when interest rates were rising. But as Richard said, it kind of has felt like in more recent times, after 2023 of sitting on the fence, it's now sort of, how many more things are there going to be politically, economically to deal with? Let's just get on with it. And without going too political, it kind of appears to be a foregone conclusion as to what the result is going to be. So perhaps people can go, well, we know what we're going to get, rather than it being quite a tightly fought sort of fight between parties. So yeah, I think that there's going to be people who perhaps sit back a bit and wait to see what happens. But, for example, late 2019, you had the whole Boris bounce effect, and I couldn't believe how crazy the market went for the first couple of months of 2020 after that. And so, yeah, it'll be interesting to see where it goes. But I think we were saying it off air before we came on, when the public are saying, how's the market? Rich and I were discussing it. The answer shouldn't just be, oh yeah, it's busy, it's really good. If they're going to be saying things, well, it's interesting, the election's coming up, here's the stats from previous elections. So this is what perhaps the history is going to tell us is going to happen. So giving that credibility piece and reassurance to them that moving is a good thing.
It feels like there's enough pent-up demand there from last year, doesn't it?
I think that there is that pent-up demand, and I think that you said about the rental figures, and I know it's easier said than done, but if first-time buyers can get that deposit together, and there's a bank of mum and dad helping with that, they are still very much in the market, even with rates where they are now, which they perceive to be not normal, because of rents being so high. They're like, oh my God, I'm paying so much on rent. If I can get that deposit together, I'd much prefer to be investing in bricks and mortar than paying the landlord's mortgage. And
you touched on it briefly. Do you think it makes a difference that it's? I mean, you had I think on the BBC last night there was their chief forecaster was saying 99% sure that there's going to be a Labour majority in the next election, something like that. That was the stat anyway. It's a foregone conclusion. Do you think that makes it easier in terms of?
I think it does in terms of planning, and we might talk about this later, but I think one of the key issues is we need some ministerial stability, basically. Well, I go coming on to the lettings piece, but I think that's underpinning everything, really, that we need, whoever the government's in place, we need someone who's going to sit and see the policy through. And I think also with the civil servants, if you talk to the senior civil servants, what they want is someone who tells them what's going to happen and they're still going to be there in 3 years' time, carrying that out rather than chopping and changing. Rather than chopping and changing. We've had 16 housing ministers. I know it's a well-quoted stat, but I think that's the key to it. I think people might choose to disagree with the policy, but as long as the policy is stuck to, they know where you're going, don't you? I mean, estate agents adapt, I think, very well to change. So even if we know that the policies might not 100% agree to it, if we know what it is, we can do something about it.
Yeah, I mean, just one of my favourite stats, although it's quite damning, is it takes longer to move home than the average tenure of the last 16 housing ministers.
Yeah, totally. Yeah.
which kind of just shows how serious.
Yeah, it is.
Housing's taken and why we're kind of in this mess and this crisis in lettings, because that that is ridiculous to us.
Totally, you need a proper plan for it.
So yeah, I mean, we've covered it a bit there. Without getting into the political side, it's probably highly likely that Labour will win. Do we think that's going to make? Yeah, have they got any key plans to sort out the letting sector, or is it too early to say, or is it going to be much of the same?
I think. I mean, I've looked at this. I wouldn't say in huge detail, reasonably well. I think that they want to do more social housing, which obviously I think is a very admirable thing to do. But I think there's probably a bit of a lack of detail behind some of those proclamations. I haven't seen the real detail of how they're actually going to achieve that yet. So they've probably got the right ideas, but whether or not when they get into the government, they'll actually do that, I think, let's see how the first 100 days of a potential Labour government pan out and judge them on that.
They have to do something about it, don't they?
Yeah,
I mean,
totally, yeah.
You know, average rents in London are above £2,000 a month at the minute. Yeah, average rents across the UK are £1,300 a month. It's a nightmare. And that's if you can find a place. You know, I've heard stories of people ringing 40 different estate agents in London, and 2 of the 40 getting back to them. And those 2 have said, oh, the property's already gone, kind of thing. It's still a nightmare out there.
I mean, my own personal view is I think housing needs to be depoliticised and taken out of the politicians' hands, because it's too important an issue to be kind of messed around with as it is at the minute, because it's people's lives at stake who can't afford to live and grit. So
they should give it to the Bank of England.
What we really need, I think, is taken away from the politicians, someone independent running a 10-year view to fix it. But I don't think that's going to happen. But I think that would sort of, and there's plenty of people within our sector who I think have the answers, and big thing that is going to be house building, because we're not building enough houses. But I think between us we know the answers, but I just don't think, I'm not confident it will happen.
Yeah, I think the planning system just needs overhaul. A lot of it goes back to 1947 if you look at it. So they need to overhaul that, look at the brownfield sites, etc., and start freeing some, appropriate land up. I'm not talking about just building everywhere or anywhere, but doing the right kind of building. There's plenty of. But if you fly out of, say, Gatwick or Luton, which I do occasionally, and you look down, it's green and there's lots of land around. There's a lot of land knocking around in the UK. Yeah, just need to free some of it up, I think.
But even the Labour Party were saying that they're going to build 250,000 new homes, and it's just nowhere near enough.
Yeah. I think we haven't built 300,000 homes in a year since 1969 or something. Yeah. And everyone kept saying that's the target, and I think we need to build something like 400,000 homes a year for the next 25 years. I
think there's a shortfall of about 4 million homes from a recent study.
I think the net migration at the moment to the UK is about 700,000, and we had, I think, 250,000 net new dwellings. So you can do the maths on that quite easily, can't you?
I can't remember the stat off, a couple of stats, and I think one that Chris Watkins said quite a bit is like it's in the high 90s as a percentage of how much land there is in this country that's not built on. And then I can't remember the stat. It's a high number, but the amount of properties that are built in this country pre-war, like it's staggering. Like majority of homes, or maybe half, were built before the war. Yeah, which I think says a lot.
Yeah. Well, let's move on to how long it takes to move home. We seem to talk about this every time we meet up, but it's not really improving. So I think the stats show that the time to agree a sale is sneaking up, but I want to concentrate perhaps more on the time to complete. So we measure that from the time of sale agreed to the completion date. It's currently over 4 months still. I've been doing a bit of research into other countries in Europe, and I think it's Norway. You can kind of put an offer in and move home in 3 weeks, and there's plenty of other countries out there, so it can be done. But we struggle, and it's getting worse, and no signs of it really getting better. Now, there've been talks of there's material information changes, the new TA6 form, upfront information. I think these might make small differences, but have we got a view on just the whole process of moving home and the sales progression piece, and are there green shoots anywhere in the industry that will help this?
Well, I would say, again, we had a brief conversation off air, Richard, when you said from the podcast what some commonalities between the agents I've spoken to in terms of like the best things they're saying. I think if you look at the 20EA data and look at the agents who have got an incredibly low time from sale agreed to completion compared to the average, and asking them, what do you do differently? Why are you seeing it go through so quickly? And I think some of those would be having dedicated sales progression, having WhatsApp groups for buyers and sellers, but also at the point of instruction saying to the seller, let's get your ducks in line. So making sure that, like you said, TA6 form, all that information is done, get a solicitor chosen so that once the sale is agreed, away we go. And of course, it's difficult because you're only as good as your weakest player in the chain, and you might get one buyer who leaves all their forms on the kitchen table for weeks before doing anything. But I think it is a big, with anything, education piece to the buyer and seller, and explain to them we can shave some weeks off this process if each time you get something, email, paperwork, fill it in, send it back, do it as quickly as you can.
And Richard, so I mean, when you were running Northfield,
Yes.
kind of when it was at its best, how quickly were you kind of moving clients in terms
We were
of days?
definitely at 3 months.
Yeah.
3 months. I mean, we had a dedicated sales progression department. And again, to echo what Simon said, we actively encourage vendors to prepare up front. And I used to tell the story about myself. I said that if I ever sell a house, the last house I sold, I basically get every single thing ready.
Yeah.
As soon as I even get the search, pay for the search. I obviously charge the buyer for the search, but it means you know what questions they're going to ask. So why don't you get it ready? It's like when we sold Northfields as a business, we knew what questions they were going to ask. So we had everything ready for them.
I would say, as someone that moved home 2 years ago, and I am in the industry, it's the forms and the amount of information you get that gets thrown at you is quite overwhelming. And I even for me, I didn't know the answers to all the questions or where to find that information. So I can kind of see why there are delays, because I think a lot of people get that and just sit on it for weeks. And if you haven't got a good estate agent helping you or assisting with that, it's just a waste of everyone's time.
I totally agree with that. I think the key, and Sam touched on it, is that you've got to have someone in your office almost who educates people and educates vendors. And I'm slightly out of touch with it. There's solutions to this out there now. There's people you can outsource your sales progression to, and some good companies now, and there's companies who will help with that. But I think the key is to get to people early and just do that whole education piece. If they do that, particularly on leasehold, and looking at the report earlier, in London, some of those areas take a lot longer to sell. The reason for that is because it's leasehold.
Yep.
I can tell you that now, and that's what we had. So, you're getting head leases, everything. So you need to get managing agents on side and things like that. So all that kind of detail needs to be sorted.
Yeah.
I think part of the problem with this, and I hate to keep badgering on about it, is actually how lettings looks and how private rentals look. So what we've seen recently is that there's been an increase in cash buyers. I think they're standing at about 35% now. So you're less likely to be in a chain than you were before. There's lots of companies around that will have you break the chain in order to move if you need to do that. But if you look at Australia, for example, they have 50% higher removal rates than we do, because of the fact that they just move into rented accommodation for a while and then go back into buying or selling and that kind of thing. And that's not a possibility within England and Wales, without a shadow of a doubt, as it stands at the minute. So fixing the lettings problem will actually help with the chain management, as well as all of the information and that kind of stuff. And I think, although we're starting to see the material information come out, and I think that trading standards will eventually take that and start legislating on it. It's just the amount of material information required is actually quite small compared to the two massive solicitors forms that you have to fill in. So even if we did legislate on it, I think it sort of needs to be more carrot than stick from my perspective, if that makes sense. But like you say, good agents, when there wasn't an issue with profitability of agents and like we see today in terms of fees and all of that kind of stuff, you did get a lot faster progression because more of them stayed through to the end. Whereas, sometimes upfront charging of agent fees, this is an area where it perhaps doesn't work very well.
And I think there are some positive signs going on. So we've obviously got our sister company, View My Chain, obviously helps on this side of things and gives full visibility to everyone in the chain. And I know the customers that use that are shaving kind of 3-4 weeks off timescales, off the move times. And there's a lot of press at the minute around Code Jute and connecting lenders, mortgage companies, vendors, and everyone up and digitizing that process. So I think there's lots of people hoping to digitize this and join it all together and make it easier. So hopefully, if we meet up in a few years' time, this could be solved. But
Let's hope so.
You never know.
Let's hope so.
Now, everyone just wants to touch on perhaps so for estate agents watching this, there's so much data available now to an estate agent. We were talking about it, Richard. You saying 20 years ago you would have loved to have all the data available now.
This data. I can't get
and
over it.
I think we're all self-proclaimed data geeks on this panel. So
absolutely love it.
If I'm an estate agent today in 2024, I mean, we've just released our property and home mover report, which breaks down by region exactly what's happening in the market. There's loads of other data suppliers out there where you can get really good information from. How should I be using that as an estate agent for a commercial advantage in my town? So you've got all these resources. What should I actually be doing with this to help win clients and build trust? Have you got a view on that, Simon? This is kind of what you do, isn't it?
Yeah, well, I think that, so you said about the data out there, and there's so much free data as well. It's so accessible. It's not like a lot of it's not behind paywall. So in terms of a variety of house price indexes. So for example, if I'm an agent today with the quarterly report that you just brought out, I'd be chopping that up into a blog myself, commentating on it, so contextualizing it. This is what I'm seeing in the local market. That's blog. That could then be video content. That could go on TikTok. It could be on YouTube. It could be on all different social platforms. That could be a video email that goes out to market appraisals that haven't converted yet. It could go to people who are ones you went to see and went on with someone else. It could be ones which are already on the market with someone else. And they're going, oh my God, this Simon guy, he's telling me what's happening in the market. My agent doesn't have a clue. And we're not short of, you've got a Rightmove index, Zoopla, on the market have a sentiment index, Halifax, Nationwide, eServe. Like there's probably, give or take, somewhere between half a dozen bits of data that come out each month. So HMRC transaction levels, mortgage approvals. Estate agents say to me, well, what do I talk about? Well, the great news is it's kind of evergreen content, but it's ever changing at the same time. So it's the same content each month, but slightly changing. So yeah, there's so many different ways they can be using it to inform their marketplace. And again, we've touched on it already and we spoke about it outside. If someone says to you, how's the market? You've got to know and answer that question. It's busy.
Totally agree.
When you said about selling your business, you know what questions they're going to ask. So you're prepared for it. If I'm going into, to play a cricket match and I know that they're going to bowl bouncers against me, I'm going to be practicing bouncers in the nets before.
Yeah.
You've got to be prepared for it. So yeah, there's so much more to it, but there's various different things you'll be doing with that data.
I mean, just to add on that, I agree with everything Simon says there. The one thing that we spent a lot of time doing was educating. We called it market message. We educated all our staff on what the market message was, and that could change every week. So they literally knew what percentage of asking price we were achieving. I'm just using that as an example, and what our market share was and things like that, because you need to have the relevant stats to give yourself, and I use the word credibility, that I think applicants and vendors like to deal with someone who's credible. And if you've got these stats and an accurate local stat, you become credible, as you were saying with the videos and TikTok and all the rest of it. You position yourself in a different sphere to the other agents, really. And people like that because you're giving them the right information. So I'm a massive believer in that, but you've got to do it consistently all the time.
I mean, the only thing that I'd add to that is the amount. I mean, on average in the UK, people move something like every 19 years. We know that most new instructions, in fact 84% or 83% of new instructions come from people whose property is not currently on the market. And many of those haven't been on the market for the last 5 years. And like these two guys have been saying, you have to stay in touch with your local population so that you're there when they need you, effectively.
Yeah. I think another point is, I think the clients, so vendors, buyers, landlords, whoever they might be, they have access to this data now. So there's sometimes they're going to be armed with a lot more data than they were 10, 15 years ago. So the fact that they're educated, they're probably more challenging, and you have to be better at knowing what's going on.
So there's various instances, like when I see, I even had it on the train down here today, got chatting to a lady next to me. She went, oh, what do you do for a living and why are you going to London? Said what I do immediately. She's obsessed about talking about the property market the whole time on the train, which I obviously was loving. But in terms of what you said there about that data, she had an opinion on it because it's out there. But just copying and pasting a Rightmove house price index onto Facebook and saying, here's the house price index and quoting it word for word, you started, which is good. But again, contextualize it, talk about what that actually means. And just to touch on Richard's point and the kind of data at 20EA, about the percentage of asking price, the amount of times an agent says to me, there's low fees and overvaluing in my area. It happens in every area, no matter what anyone says. So if you can use data like TwentyEA to show that you're more likely to get a property sold and get a higher price, that's then helping you convert that business, get a better fee, show that they shouldn't start too high and reduce the asking price. And Stuart, just on the 84% stat, which I find incredible, again, if those 84% of people are new to market, haven't been on for 5+ years, if they get leaflets through their door saying, thinking of selling tomorrow, ring us, well, that's going straight in the bin. Whereas if they keep seeing you across blogs, social media, talking about the market, in 5 years' time, when they're thinking of moving,
your credibility is there. Totally. Yeah.
He kept me updated on what's going on.
It's almost a local politician's.
It is almost. It is.
So on that point, I don't know how I feel about this, but you talk about Chris Watkins saying about the digital mayor and like creating that social presence in your local community. There's a Facebook group where I live, and it's got just shy of 20,000 members, and the gentleman who's the admin is now running for local councillor.
Wow.
And I'm like, that's interesting. So he has built up this Facebook group. Now, whether or not when he started it a few years ago, did he intend to be councillor? I don't know. But he now controls the narrative of that Facebook group, and he's built up a reputation as the man about town. He goes and interviews local butchers and does a lot of things like putting the Christmas lights up and doing charity work. So I think some people's political beliefs could be swayed because of what he's been like.
I mean, it doesn't cost us a lot for estate agents to sponsor a local football team or something like that.
Absolutely. I'm a huge believer in sponsoring stuff like that because it's got a longevity to it as well. So,
and there's a huge opportunity to say, I mean, a lot of estate agents that I speak to, they cottoned onto this 8 years ago, and they've been doing this for 8 years, and they are cleaning up. Yeah. So it's never too late to start. So if you're not doing this already, you just need to get on with it, because it's not the future. It's already here. So but that's great views. And finally, we've covered some really good topics. Finally, I'd just like to perhaps touch on where we see the industry going. It's perhaps an opportunity to speak to you, Richard. So you obviously owned a good, strong 4-branch firm in West London North, and you sold out a couple of years ago to Leaders Rome's Group, who are owned by Platinum Equity, or a PE house from America. And there's lots of interesting stuff going on in the industry. We've obviously had the kind of merger of PFG and Belvoir, so they're now a massive lettings giant. We've got Lohman Group, who seem to acquire a new brand every week. There's so much going on. There's big mergers and sales rumoured in London for all the major players. There's so much going on in this M&A space, and lots of consolidation. You've got the rise of the self-employed model, perhaps the demise of the traditional the more onliners. Where does a traditional agent fit into all this? Where do we see the industry going in 3 to 5 years' time?
I think it's a very fragmented industry. I do, however, see it a lot more kind of mergers, acquisitions, etc. I think particularly on the lettings bit, I think for a small operator to run a lettings book is a lot more problematic than it has been in the past, just for all the regulations and everything else. So to answer your question about traditional agent, I think there's very much a place for them. If I was a traditional agent now, I would be looking at for acquisition, particularly on the lettings book, because it's very difficult to grow your lettings book other than by acquisition. And I've acted with 2 people in the last 3 weeks where we bought other people's lettings books, because it's a nice way of increasing your portfolio without taking additional premises on often. Because you get a lot of people my age and they want to retire, basically. They've had enough. And if you look at the kind of profile of the age bracket of owners of businesses, I'm sure we were talking about it earlier, weren't we, Simon? A lot of them are at that stage where, what do they do with themselves? So I think there's an opportunity actually for people to do acquisitions at the moment on a smaller local level. Yeah. But I think the bigger boys are definitely the only way they're going to grow their businesses is by acquisition as well. So that's why you're seeing all this going on at the moment. Yeah.
Simon?
Yeah, I think on the lettings piece there, and you're obviously very well placed to talk about sort of exiting a business, and the letting side, the value in the business from that. If you're a sales only business,
it's got no value.
There's no value there. So, but what I found with the letting side, a lot of agents talk about that kind of the keys to the treasure chest of landlords, and a lot of the bigger companies seem to go, rather than using different tools, data, tech, whatever out there to go and generate landlord opportunities, let's go and buy an independent business who's got 100, 200, 500 managed, and let's buy them out as they get towards retirement, like you said, and do it that way.
Yep.
But I also think it's interesting, we saw a thing today about strike, for example. So, I mean, touching on that, I mean, they've lost, I think, was it 19 million again for the second year running?
Yep.
So I think I don't see those as kind of sustainable business models long term, because investors aren't going to keep losing that kind of level of money for any period of time.
And obviously we've seen the rise of the self-employed agents, haven't we, Stuart?
Yeah, yeah. So I think, you know, they're now, what, 2% of the marketplace, something like that, which is higher than the largest traditional agent and higher than the largest online agent. But yeah, I just wanted to ask you guys about this. So we were talking about staying in touch with your local community. Do you think the same opportunities are there to stay in touch with your local opportunity if you're the manager of, I don't know, a Barnet branch of Foxtons or something like that, versus being a self-employed estate agent in that area versus being an independent in that area?
I think the way that Foxtons work is very much different, but what they have set up is they have their client services centre, which we also had client services, so they're constantly staying in touch with their database. And where all these bigger companies are very good at doing, the ones in London, certainly like Foxtons, Dexter's, etc., is they do have dedicated teams who are constantly ringing, and we did the same thing on a smaller scale, their database. So that's how they did it. But I think this is very much an opportunity. If I was a self-employed agent, as you were talking before, get yourself out and about in a smaller town or a smaller area and dominate it. So you can offer a completely different bit, I think, to that. So yes, to answer your question, I think there is.
And whilst, to give a slightly different perspective on it, and in agreement with Richard, whilst I'm B2B in what I do, I've very much tried to, you know, there's not been spending out loads of money on marketing or advertising. It's been doing things like this, having a podcast, having a Facebook group, going to networking events. So hanging around where my potential audience hang around. So for those self-employed agents, is it sponsoring the school fete?
Yeah.
Because typically it's going to be people who, funnily enough, live in that area who are going to have kids going to that school.
And the move is if they have kids, because how accommodation gets too small. So,
exactly.
Yeah,
so yeah,
absolutely.
I think on the self-employed side, I think that it's easier for them to be a digital mayor because they haven't got any politics behind the scenes where it's like, we must get sign off before you put that out into the public eye. So I think that's where, they can be more agile in the self-employed model on that.
Great.
Interesting.
Well, we could probably talk all day about this, but let's wrap it up there. Simon, Richard, Stuart, thanks so much for your time. We've covered some really good points. So yeah, thank you very much.
Thanks.
Thank you.
Thank you. Really enjoyed it.
Yeah,
Thank you.
Thanks.